Hi everyone. It is August 26, 2022. I taped my class today earlier because I'm going to leave in a while. But of course, today is a very important day. We will be discussing how to invest in the US with only $100 and how do we invest during recessions. So let's begin with this class. All right. So a few things to note for those who are beginners. I'll give you like a 5-minute breather on how to invest globally with just $100. So first and foremost, of course, in order to invest, you do have to have an account. So today is August 26. My name is Nikki Yu. Thanks for liking and subscribing the channel. So if you are not informed, any Filipino out there can actually invest globally with as little as $100. I personally have experience using these three platforms: Interactive Brokers, eToro, and Webull. Now, Webull is a Singaporean company. eToro, I don't know where it's headquartered in, but it is very effective in what we are teaching, which is doing some trading in short term as well as some long term. Interactive Brokers, I mainly use it for margin because it is a very successful company that's been in existence and is being used by many professional traders as well. Now, all three platforms, as I repeat, you can invest with as little as $100, but I would suggest starting to open with about 2,000 US dollars. So with $100, you can probably just buy one company. So most likely it will be a tedious task if you open an account with just $100. So I'd suggest opening your account with at least $2,000. So I will not be shy. I'll tell you already my referral codes. If this is your first time to actually learn how to invest or trade globally, you could please hopefully use my referral codes. I'll also put it in the thumbnails after this YouTube video is finished. So my eToro account is there, my IBKR, and my Webull, Awesome 10X. So Webull is a Singaporean company, and you can see that it is also a one-stop trading platform for US and Hong Kong stocks. You can download it in the App Store. For the Filipinos listening here, if you're using a Singaporean account, i.e., let's say you're an OFW, you're staying in Singapore, this one is for you. Why am I advocating Webull? Actually, Webull has the best when it comes to the charting, and they also have this National Day promotion wherein you can get $100 of fractional shares if you start opening an account and depositing as little as $2,000 from August 1 to September 1. So right now it's August 26. I know that you may only have 5 days. Either way, even if this promotion ends on September 1, I do believe that by September 2, they'll have other promotions. It's just not going to be as good as this. So you may want to actually try to open an account. Anyway, it's very easy. All you got to do is go to the App Store. So I downloaded Webull in the App Store. So for the Filipinos, you could see Webull. Filipinos residing in the Philippines, you could see Webull trading into your account, but you may not be able to deposit. So the trading is only allowed for the Webull Singapore app. So what I did, and I asked the people behind Webull, all they told me was you can easily open an account, just download it in the App Store using the Singapore so that you can download the app and then eventually just change back to the Philippines, because a lot of Filipinos are also using Webull because there is a lot of good things. Well, number one, you've got the fractional shares allowed. So basically you can buy with as less as $100 if you want to buy Google, although Google already had a stock split as well. And Google is now trading at about $115, which you can buy one share if you wish. Also, this is true. I've been using a lot of brokerage firms, and in Webull, primarily if you use US options, the commission fee is zero. So they're like the Robin Hood of Singapore, and it's already available also for Southeast Asians like us, like Filipinos. So this is something that you want to actually consider if you are new and you don't have a brokerage firm account. You may wonder, why am I using three platforms? Because all of them are really good. So initially, my first platform was Interactive Brokers. I've deposited, I started with about $10,000, and eventually I grew it and I grew it and I added in capital. I would suggest that if you're new, the very first thing that you do is you do not invest a lot and you do not put a lot of money. I'd suggest you can start with $2,000 even. But if you want to start with 10,000 or 20,000, go ahead. The nice thing is that in Webull, it is free indeed. So the platform is still free. You can open an account, unlike other firms. Like for instance, in IBKR, I actually pay about 0.2% in commission for platform fees. I also pay a data. So in the US options, I do pay this one. So there's a lot of $2 per order, but my money is already in IBKR. So I don't usually withdraw. I do sometimes, but it's not usual for me. As for US stocks, this is true. The reason why I went to open Interactive Brokers was the commission fees were negligible. For the Filipinos out there who are trading the US, you would see that US, they only charge us about $1 fee. So actually, all three platforms which I use, Interactive Brokers, eToro, and Webull, all of them have negligible fees. It's just that Webull, perhaps it's in a promotional state, they're giving zero fees. So this is literally like a Robinhood for us Southeast Asians because we don't have access towards Robinhood. So this one, I think you may want to actually include in your platforms. It has won already the top choice for US trading options trading. I do use options. I do teach options. This may not be suitable for the newbies, but actually, whether you're buying stocks or you're buying some call options, it will work in Webull, even at just $2,000. And this is true. When you open a Webull account, you execute one option trade, let's say a $200 position. If you buy a call option, say on Airbnb, you can receive free market data complimentary. So this is, I think, something that only Webull offers because IBKR charges me for market data. So I don't really pay a lot in terms of market data. So I also do delayed 15-minute delay if you don't want like real-time data. Because I think for my type of trading and investing, I don't really need like active, minute, minute to minute, second by second. No, so even if, but of course, it's still good to see that I can access real-time market data within Webull. So that's why these are all great platforms. Webull has been awarded the best broker by Investopedia for the lowest cost options trading. You can also invest in fractional shares for as little as $5, although I would assume that you should probably have mga $100 if you're buying anything. And this is nice. Full extended hours trading, 16 hours of trading in the US market hours. I usually trade pre-markets, i.e. in the Philippines, I'm talking about 4 p.m., 4 p.m. that is 4 a.m. in US, and it trades as until 8 p.m. in the US, which is 8 a.m. in the Philippines. So sometimes when I wake up at about 6 a.m. or 7 a.m. in the morning. I get to trade still on the extended hours. In fact, I would say that the reason why I use primarily IBKR is because of that extended trading. Because I don't usually want to wake up 1 a.m. or 5 a.m. or 3 a.m. or 11 p.m. in the evenings. I think the extended hours is very suitable, especially for us Southeast Asians. So I would really recommend open IBKR and Webull for the extended hours trading, even just for that. Now, about the fractional shares, all of them offer that. All of them are low in fees, and I've used all of them. I've been able to deposit and withdraw quite conveniently. And for companies, for instance, like Enphase, for instance, solars, I'm long leaders like these. I have it in my eToro. I have it in my IBKR. So those are just a few things for you to know. So that's like for the beginner version. So you open an account. It's very easy. How to open an account? First, so there. How do you basically enter the markets? The first and most important thing is open an account. So all of these are easy to open. For Interactive Brokers, all you got to do, for those who are new here, just simply go to interactivebrokers.com.au. Let me share to you the website now. Okay, so in the website, you could see that in Interactive Brokers, if you have idle cash balance, this is also a big draw for me. Interactive Brokers, I open an account here because this is true. It is the lowest margin fee by stockbrokers with as little as about 2 to 3% a year. So usually when you have $25,000, they will lend you money, and I usually take advantage of that because I can borrow $25,000 as well, or $15,000, $20,000 for as little as about 3% a year. So I do use the margin a lot. And IBKR is the best when it comes to margin rates. That's why I like Interactive Brokers. Why did I say 25,000? If you are a day trader, Interactive Brokers has a limit of about $25,000 above if you are a day trader. So sometimes I day trade some positions. That's why if your account is less than $2,000, Interactive Brokers may not be the best suitable platform for you. This is the reason why I will also advocate eToro. So eToro is very suitable for those who are opening with only $2,000, $1,000. And I actively help people. In fact, we have the small account challenge wherein we show in eToro how we deposit and how it withdraw. So example, if you're new here, please don't hesitate to like and subscribe so that more people and the algorithms can know about us. So I teach people in the Philippines that so what you'll notice in my portfolio is that in my trading history, I usually use leverage, guys. So, for instance, in the last 30 days, for instance, I start my account at about $3,000. Right now, you're seeing it's up about 30%. No, so I'm up 30% for the month. I'm $4,000 up. I mean, I'm $1,000 up. It's $4K now. I usually teach people to deposit $2,000 to $3,000 in their accounts, and then they withdraw. What's nice with Awesome 10x eToro is that I can just deposit funds gradually through real time through credit card. So I usually deposit $1,000 when I want to, and I also withdraw $1,000 every time. So for instance, usually the case is if I think that what I have is enough to take profits, I'll take profit on this. However, and you will listen to my presentation later. The reason why I haven't been taking profits yet is because I'm making quite a significant long-term position as well on some of these, i.e., I'm not doing just short-term trading. I do believe that for Uranium, I could make about a 500% gain here. I think for Airbnb, I could make 100% gain. So that's the reason why I am not willing to basically exit the position just yet and just trail it instead. So with eToro, what's nice about it is that opening is easy. Actually, all three accounts, it's very easy to open. All of them have their perks. The margin is highest given in eToro. That's why you can see example for Uranium. This $160 is actually a 10x levered through a CFD, contract for derivatives. So I'm using usually CFDs in my eToro. Primarily, I buy most of the stocks here 5x levered or 10x levered, and then I cost average them as long as I like the company. And then if I don't like, I get stopped out, and I just let it hit my stops. For IBKR, I like it. Why? Because it's complete. So IBKR is more complete than eToro. It is comprehensive. So I can invest in Hong Kong, I can invest in Australia, I can invest in US. So trade anywhere, options. That's the reason why I like it. In terms of cryptocurrencies, eToro has the advantage there. But eToro charges quite a lot in fees. So personally, when I do cryptocurrencies, it's cheaper to buy it in Binance, and it's cheaper to also buy some crypto-linked names inside Interactive Brokers. And I can also access Bitcoin in Interactive Brokers if I only want to buy Bitcoin or Ethereum. So they have actually those in instruments as well within the app. This is also true. Well, with Webull, I have never explored if they offer crypto, but I'm not really interested with crypto and Webull. I will be very honest here. I don't usually buy a lot of crypto. It is very negligible in my total portfolio. I am largely a stock-based portfolio, so I'm really more into stocks. So there. I will answer just a quick question. I'll answer that. Somebody asked me. Henry is asking, is Tesla a buy? Tesla to me seems to be so the $300 is now a $900 because that is a 3:1 stock split. Tesla did a stock split. Tesla is in my buying entry if I can get it at 800 to 850, but I don't think that it is the biggest best discount in the world. So I'll share to you a few of my passive no-brainer ideas in the next few slides. So let's begin. Okay, so let's go into the awesome 10x investing during recessions 22 edition style. Let's go, guys. Okay, August 26, 2022. My name is Nikki Yu. This is my Twitter handle. Please follow me at Business Trader. YouTube channel. Please like and subscribe. And the website is awesome10x.com. If you're interested to learn from me, learn how to trade, how to invest in stocks. If you want the beginner course, we have that beginner and advanced. So everyone, the reason why I want to share this is that people usually shy away or they even stop investing altogether in the very first recession of their lives. And that's a mistake. 90% of investors stop. Either they stop investing or they quit or they just simply don't look at their account. This is why most investors need more than a decade just to double their money, because the average return of S&P 500, if they own the S&P 500, is to double with about 8 to 10 years. Your average S&P return is about 10%, 11% thereabouts. However, if you start investing during recessions, you compound your wealth faster compared to the average market returns. So you can technically, by just investing in a recession, that timing that you are doing when you invest more in a recession will make you compound your wealth half the time. And if you are getting the leaders and outperformers, you can probably double your money within just 3 years. So you don't need to wait 10 years just to double your money. You can sometimes even 10x a few companies within just less than 3 years. So obviously, falling prices hurt your investment accounts in the short run, but a crisis really presents unique buying opportunities to grab secular growth assets while they're on sale. And all the best investors, and I believe that you are one of the best investors because you're watching Awesome 10X now. Thank you. And you keep a level head and you take advantage of crisis. We believe in Awesome 10X that when calamity strikes, markets are feeling the worst and stocks are punished accordingly, obviously. Historically, though, when the dust clears, optimism returns and prices bounce back. And most of the bear markets are short-lived, 9 to 18 months. And then after that, you've got about a bull market yet again. So we think that about 2023 to 2025, next year, next 3 years, you're going to get a lot of recovery. And the markets would respond once more towards fundamental signals rather than perceived turmoil. So if you want to globally invest in 10x trends, first you have to realize that the 1,000 point drops and volatility is normal. It is a feature of the stock market. The stock market is a roller coaster. Now, thankfully, I do believe that the 1,000 points, the 5,000 point drops are primarily the worst has been finished. And any dips in the next few quarters would just be negligible. Actually, it could, yeah, some stocks could go 25% down or 30% down further, because not all stocks have to deserve to go up. Some stocks are lagging, some industries and some companies are still reporting bad numbers. But I can already tell you that some companies have finished the worst, and I'll discuss why they, in my view, have finished their worst, i.e., their bear market is over. For these few companies, just a few, I believe that they're already on their way towards all-time high. Therefore, after the stock market of terror, you do get that great return. So let's discuss these. I give you 5 companies today. These are highly recognizable brands, but I will still discuss them anyhow. Everybody knows Disney. Everybody knows Airbnb. They are my top picks on the travel reopening place, and they are already firing on all cylinders. The company is already recovering very, very fast, and we expect their full year 2023 to be greater than 2022. If not, some of them are already hitting actually pre-pandemic levels. So some are even better than pandemic levels. So Airbnb has already broken above 2019 levels. Disney is nearing the 2019 theme park levels. So you've got really some upside coming in on these two names that are trading at, for Disney, it's trading at 7-year lows. For Airbnb, it is trading at near the lowest of its history for, because Airbnb was just listed about 2 years ago. So 2021, Airbnb got listed at these levels, though at 100 to 115. We expect them to go as high as 50% for next year. So you might want to really pay attention to what I'm going to say here. For Facebook and Google, Facebook is the more compelling buy here from a strictly discount perspective. But I would say that Google here at about $2,000, because there is a stock split, 20:1 stock split, you can avail of Google at the 100 to 115, meaning you're probably averaging in about 2,000 to 2,300. So that's a 15% range that you're accumulating in. And you're also accumulating your Facebook at about the 10%. area here. And for Cameco, which is CCJ, the largest uranium producer, you're on the cusp of a potential 200 to 500% move on uranium. And you want to have an exposure on the second largest uranium producer in the world that is listed in New York Stock Exchange. So I want you to be cognizant of these recognizable names. All five of them, importantly, are making money. None of them are negative cash flows. All of them have earnings last quarter that are growing. Some would argue it's flat, but it is still a growth. So, for instance, FB is still growing 7-8% a year. You've got Google actually growing 40% on their on cloud. You've got obviously Disney and Airbnb growing more than 50% on their revenues and their earnings. CCJ is having all-time high reports on their earnings and income as more and more nuclear plants are coming and being installed worldwide. All five of them, importantly, also have buyback programs. All of them are very recognizable brands and they are the largest leaders in their respective fields. That's why we want them, because hashtag winners win. An awesome 10x commandment is you have to have the leaders with a total addressable market that is bigger than their market caps and that they can take advantage of that market share when that industry continues to grow 20 to 50% or even triple digits over time. So why am I discussing again these sectors and why do I reiterate our buys? For Disney, it's very simple. We're talking about the growth in streaming. Disney has already gone to 20 million subscribers, out-seating your Netflix. Everyone else has had a hard time. They've been losing money. Netflix, Warner Brothers, and Paramount all did not make money. Amazon Prime Video and Apple TV, they don't report it separately as Amazon usually does it in a cluster. That's why we can't really tell. However, from a scale perspective wise, we know that Disney has so far outseated Netflix in just 3 years, from 2019 to 2022. Disney Plus started 2019. And there's leeway, obviously, for Disney International streaming to continue growing. And that gives you so much tremendous upside for Disney that's just trading at 7-year lows. Not just that, we think theme parks, which had grown already 99% year on year, will continue to grow another 50% because international tourism arrivals have yet to go back towards 2019, which we actually are seeing from travel giant numbers like Airbnb, Expedia, Booking to actually go back towards Disney's theme parks. So you've got really a lot of abundant upside, less than the downside on these two names, Disney and Airbnb, definitely. So Google is obviously a cloud play, and it's the growth on cloud. Companies continue to migrate towards the clouds and to the cloud. And we believe that the market share of Google, which is 10%, is still continuing to grow because of its low base. It is growing fast amidst, of course, the entire industry pie growing. Amazon, Microsoft, and Google, all of them have been reporting 30-40% market share revenue growth. Revenue growth. So that tells you that the industry is very good in the cloud. Facebook, okay. A lot of people, a lot of exaggeration on TikTok Reels, but TikTok is not really hitting the revenues format of Facebook. So and all of the negative flack on FB about metaverse, in my view, is going to be quashed because of the $10 billion bond offering of Facebook for the metaverse. That means that from a balance sheet perspective, FB trading today at 5 times free cash flows and 10 times multiple is unheard of. So FB is 10 times multiple for a tech company that is recurring revenues. Google is trading at about 20 times. Technically speaking, Facebook is the more distressed asset value here. But both digital advertising, in my view, has been hit hard due to the perceived repercussions of recession. And that is true. I do believe in recession. However, these two entities are not going to be as affected versus the entire world. So I think like digital advertising obviously hit hard on your Roku. It hit hard on companies like Netflix on the recession camp. But you don't really have that big of a weakness on these two. Cameco is really more of a nuclear play. We've got, after 10 years, a lot of companies and a lot of countries all signing up for nuclear plants, all growing and opening it again. So that's Japan, that's Germany, that's US. And of course, China has been opening since 2011. And so the demand for uranium continues unabated. I would say that you want to have an exposure on the nuclear trend. And Kameko J is one of the best positioned for that secular trend. All of these are mega trends, which is why I'm confident to tell you that if you just cost average and sleep on these entities, even if you just do nothing but buy and sleep, that would make well for you. Okay, so let's talk about some industry megatrends here. We all know that 50% of the world, specifically 59% or 4.7 billion people around the world, are using social media as part of their daily lives. 227 million new users have come out online within the last 12 months. So these are probably the younger crowd. The average daily time spent using social media is about 2 hours and a half. So the number of social media users as of January was 4.62. As of July, this was 4.7. A lot of people are saying that Facebook is a low growth company, but they forget the sticky, loyal user base. You cannot actually say that you need 50% growth when the entire world is just 7 billion people. So obviously, the penetration rate of Facebook will be lower and lower in terms of growth. But obviously, these are some facts. So the social media users continue to grow at about 2 to 3% clip, which is similar to population growth. The average daily time spent continues to be strong at about 2 hours. You've got a lot of average number of social platforms. There's a lot, but obviously you are already dominated by Facebook, WhatsApp, IG, and you have basically all the population 13 years old above, all in social media. That's 75%, which means that in terms of social media users versus total internet users, you've got 93%, or technically you've dominated everything, which means that advertising to this group is going to be a recurring business. So from January to July, this continued to grow. You might say, oh, this is a small growth, but we're talking about a 4.7 billion base. So that's, you don't even need growth when you're talking about already 94% of the entire world already consuming social media day in, day out. So when you want to enter the social media space, I say YouTube through Alphabet. And of course, I'm using YouTube daily as my Google search trends for all search engine. I am a big believer of Google ever since. And I will not say that a recession is going to derail this revenue and earnings behemoth for Google. So obviously here about 101 to 117. It's very clear we like the digital advertising. Digital advertising continues to remain unabated in YouTube and all the Google search advertising. And so I would say non-stop buy for Google and non-stop buy for Facebook. Okay, so Google secular trends as well. In terms of Q1 2022 market share, you've got Amazon Web Services at 33%, Microsoft at 22%, Google coming from low 1 to 2% is now 10%, which tells you that these three have the best market share for all your cloud infrastructure, which continues to grow actually at a 30 to 40% clip on an industry segment. So I have fervent belief that in your digital advertising and cloud, you want to own Google. It is cheaper, obviously, than Microsoft and Amazon. Of course, I need to summarize. When you are investing, long-term investing, you have to know the stocks you own. You need to know why you own them. You have to have an explain like I'm five version. You have to have an elevator pitch, no? And these are just really the easiest names, recognizable. And the thesis remains in play, no? I have never seen a deterioration with these companies. Only that their stocks became cheaper. If new data gives us higher conviction, higher concerns in our investment thesis, nothing matters more. Everything else is noise, no? So far, the fundamentals of these group has actually gone stronger in 2022. So for Walt Disney, let me just explain, no, even from a chart perspective, if you're not a technician, I have to share this to you. The big bases here have been done, 90 to 120. This was a buyback program for Disney, and this was also a buyback program here at 90 to 120 for Disney. Not only are you firing on all cylinders, the only time that Disney fell to about 90 to $120 during the pandemic 2020, this time actually the theme parks were really closed. But nowadays in 2022, all the theme parks are open. All the revenues and all the signs are pointing to the strong reopening, not just of the theme parks, but all of your movies. The reception of the market with Thor and with Doctor Strange Multiverse of Madness has already helped Disney hit $1.7 billion for those two movies alone. And they're on to making another $1 billion movies again with the Phase the phase 5 of the MCU universe. You've got movies coming out for Black Panther, Wakanda Forever. Let me show to you the Walt Disney bullish thesis, obviously, for Walt Disney here. So on August 11, a day after the earnings, August 10, no? So let's just take a look very quickly on Disney's numbers. All the imported cylinders of Disney have gone all-time high in terms of their 3 years revenues. Actually, even on the history, I'll also say that. Um, Actually, the all-time high on the theme parks. But yun nga eh, you are really getting the momentum already. So Walt Disney, obviously, strong performance on theme parks, big increase in live sports viewership. Obviously, that NBA championship helped a lot. And then you've got the NHL coming out. Significant subscriber growth for their streaming services. The Disney Plus really did well, adding 14.4 million subscribers in what we would perceive as a strong recession worldwide and in the US. You now have 221 million total subscriptions across streaming offerings, now beating Netflix because Netflix is about 220 million. So I do believe that there are important critical buys. So we've been buying Disney from about 90 to 110, 112, 115, any price below 120. So last price right now is 117. I think that you can continue to buy, as I said, any price between 90 to 120. Obviously, the lower it goes, the better your position should be, the more you should buy. In the short term, no, just in case you're looking at the next year, you do have some resistance here at 150 to 160, but I would surmise that we will hit that 150 to 160, which means that even from a conservative standpoint, if you get it at 110, you can get about 50%, which is a tremendous upside if you're only waiting for 1 year. So take a look, 2011 to 2015. Because why am I looking at 2011 to 2015? Because the prices that you're buying now for Disney is almost the same price as 2015 when there was zero streaming revenues yet. So you could see that in 2011 to 2015, the revenues was about 40 billion to 50 billion. Their net income was about 5 to 8 billion. For 2015 to 2019, you could see that those revenues grew. Obviously, in the pandemic, it was $69 billion a year for Disney, with about 10 billion of income. 2018 was a great revenue year and great income. Why do you think there was a 3 billion drop here on net income? Because 2019, this was the first time that Disney started investing in their Disney Streaming Plus. So that was the difference of 13 to 10 to 11 billion. So so far we did get great movies, and the Marvel fan base obviously is the biggest draw for Disney. People have been subscribing to all the Disney Plus due to the Marvel steady flow of releases. If you're a K-pop fan, you would also be happy to know that BTS has been added into the streaming version of the concerts of BTS is also inside and included Disney Plus. So I would say that why am I basically in love with Disney? This is not a like, yes, this is a love. Audience expansion, long-term profitability, NHL deals, Stanley Cup, music to all the ears, obviously, of all the sports streaming services. I do like Fubo from a small cap version. We've been buying Fubo as well, $2.50 towards $4. Disney Sports Hours really grew 50%. So that is a strong recognition that the niche sports streaming is being paid. Sports streaming is a 70 to $80 so that you can watch all those matches real time. For example, if you're watching a Manny Pacquiao game before, a Manny Pacquiao fight, diba, you have to pay pay-per-view. So the NHL deals, usually you watch a game real time. Obviously, it has to be live stream and live as the game is happening. So people pay a premium for that. And Disney charges about 70 to $80 for that through their ESPN Plus. Now, all theme parks are open. You could see that this 90% growth from 11 billion and 21 billion in the last 9 months is a great number for Disney park experiences. The reason why I want you to be very bullish on Disney is that prior to a pandemic, this used to be as high as about 26 to 27 billion dollars. So I see a strong rebound happening here for the Disney parks and experiences. I would also see a strong rebound here on the media and entertainment distribution. And take note, in just 9 months, July 2, 2022, the total segment income of Disney is already 10 billion. This is just almost at the peak of 2019. As I said, no, in 2019, Disney was already earning 10 billion. Now you get to buy Disney with just 9 months already beating at 10 billion, and yet the price that you're buying is what? You're not buying at $200. 2019, 2020, due to the hype, well, it's not really hype, it's more in the reopening of the market. Disney was beating on all the earnings reports. That's why Disney hit as high as 200. The reason why this fell was because of the growth rates, about the high interest rates of the Fed. But we can clearly see that the high interest rates of the Fed does not deteriorate the business of Disney. And this is just really a great opportunity for you to buy a really fundamental secondary trend with a high quality discount. So Disney is in your top buy list, top conviction buy picks. Okay, why am I talking about Meta as well? So this was the 2021 numbers of Meta. You could see that Meta, I can now buy Meta for just a cheap price of $165 today. Let's show to you the chart. So for those who are opening an account, I would suggest that you open an account for buying Meta. Meta, aka FB. So Meta, you're able to go back in time and basically get a superior business at the same price of 2016's, 2019's, no? Here about 2020 pandemic levels. So 2020 March, Facebook was trading at about 150s, 160s. You're also paying the same price, no? So basically, the pandemic hit it and made them a lot of money, and then you're back as it's almost like a rewind in time, guys, wherein you get to buy in March 2020 during the pandemic lows. So it's music to the ears, obviously, of great investors, and you are one of the greatest investors. So congrats for watching this, and hopefully you press that buy button, just like me. I'm betting on Meta. So here about 168, I'm buying here. Let's show to you the numbers of Meta. So obviously Meta has a lot of free cash flows. That's why it can buy back all the shares that is now trading at a 50% discount. Revenues have grown every quarter, 28, 29, 30 billion. This is 2021. And if you want to take a look at 2022 numbers for Meta, this is the Meta 2022 numbers. You've got also about $29 billion. So in general, Meta is quite a recurring business. Kind of like when I look at Meta, I see it more like a PLDT. It's really, really highly predictable. As you know, that every company in the world is basically in social media and has to basically spend for that sale. So everyone is investing in the big behemoths like the monopolies. I would argue that Google and Facebook are monopolies. And when I'm investing, I love monopolies. That's why I know that YouTube is a monopoly. I know that Meta with Facebook, IG is a monopoly. Now, people would argue, well, TikTok's there, but TikTok is not doing this revenue stream. So for all the competition, I think that's overblown because Meta is actually earning money and I'm paying 10 times multiple for a monopoly. Guys, it's almost as if I'm buying a utility agent here. It's like I'm buying a monopoly of the world when it comes to digital advertising. And you can see that the rest of the world continues to grow. Asia Pacific, Europe, US, Canada. There's just no reason for me not to invest in advertising, especially in monopolies like these. Income from operations, in just one quarter, Meta earns 8 billion EBIT, 8 to 10 to 12. So that's quite significant. Now, people have been saying that this Reality Labs loss is quite big. Take note that Meta is shedding about $3 billion for their Reality Labs. That's for the Oculus, that's for the virtual reality, that's for the metaverse. But my view is that if they are gonna also have some bond offering, that means that they have enough cash to basically succeed in all their operating income. And you can see that expenses as a percentage of revenues, it's quite small. So general and admin is 10%, marketing and sales is 12%, R&D is 30%. So you're seeing that this 30% R&D is mostly relocated towards the metaverse, and the cost of revenue is 18%. So I'm really seeing that Meta is a long-term play for the metaverse. But even so, even with their existing family of apps, it's already trading almost as a commodity, almost just like buying a PLDT for the Filipinos. It's like paying for a utility, which I know is effective. And the only reason why Meta will not pay a cash dividend is obviously, even if they are awash with cash, they are so much awash in cash, they would prefer to be investing that cash towards the future. So you're seeing that from a capex perspective, year to date 2022, they're spending about 14 billion. They've already spent 7 billion this second quarter, and they've spent 14 billion. That's almost That's one of the reasons why a lot of people are negative, because they believe that all these capex would have a 7-year runway before it makes money. But to me, you know what? They can afford to really spend that money. And take note on the billions of people that are using the family of apps. We're talking about the Instagram, Facebook. It's about 3 billion people. 3.65 if you add all, no? So this is for FB, 2.88. And then if you add WhatsApp and IG, it's about 3.65 all combined. Family average revenue per person, that's huge, guys. That's $8 per person. So that's how they get that $30 billion of revenues. And then the daily active users, it's pretty significant. That's 2 billion users in the world. So why do I like it? You've got a sticky, loyal base. I say it's their loyal because nobody can really afford not to be in FB. And when you take a look at the free cash flows, this is something that every company would be basically asking for. FD's market cap today, as I said, you're just paying so they have about $40 billion of operating income, and you're paying something like 400 to $500 billion thereabouts. How to decipher? No, Finviz. You go to Finviz, click Meta. That's Meta Platforms. You can see that the market cap here is about 470 billion. Their income is about 30 to 40 billion. So you're really just paying 10 to 15 times multiple, and that is really exacerbatedly cheap for a high quality discount. So people ask, hey, do you want to buy on the fangs? I say on the fangs alone, I like YouTube and I like Facebook. So that means I like Google and FB, i.e. I like Google and Meta. I like Meta. I might like Tesla if it goes below 800, but at these levels of about, when I'm saying 800, I'm talking about 800 divided by 3 because they've already done a stock split. So yeah, so I'm just waiting for it to go to 70 below for Meta. So for Tesla. Okay, so let's discuss. So yeah, so I'm a believer in Meta. Mostly it's a play on cash flows. And for 2021, digital media already captured 200 billion in terms of dollar ad allocation. That's about 65%, and that continues to be as much as $320 billion. Actually, I believe in digital media advertising. I don't see any company not spending on the digital ad front. This is also confirmed by the trade desk. So for other people who like small caps, they would prefer to buy the trade desk, which is also, I think, a buy at about $55 to $60. It is quite expensive to buy the trade desk. That's why I prefer getting Google and FB, because the trade desk is trading quite expensively. It's like a $20 billion company with only $1 billion of sales. And yeah, income is just small, around, they had a revenue of about 360 million. Basta, it's not a very expensive company, even if they're growing and firing in all cylinders. So that said, I wouldn't be shorting the trade desk because the advertising industry in the digital front, in my view, is unabated. So I believe in these. It may not be as high as 500 billion, like some people are expecting 400 to 500 billion dollars of spending in 2023. I think it's going to be about 300 billion, but still a lot of that spending, that 300 billion dollars, will be monopolized by two companies, which is basically FB and Google. So Google, for your information, makes about 70 billion dollars of revenues. That is, of course, not just advertising. Because half of that is advertising. 40 billion is on YouTube. So 160 billion is YouTube. But it's not really just YouTube. It's all about search advertising as well. But the reason why I like both of them is obviously digital advertising is the cheapest way to reach your global consumers. So I agree with that. Advertising has contributed towards the global economy. It is really playing a huge role in sales growth. Any company, in my view, whether traditional or digital, has no choice but to basically reach their customers online. And so retail media has basically been very effective. This has been the way that Pinterest makes money. This has been the way that even connected TV wants to make money. Even Netflix wants to go into the advertising industry route. So I am a big believer of traditional advertising basically switching towards the digital. So I believe more and more that there is the dearth or the basic zero advertising being spent on radio, print, media, TV. It's all online. So social media has already overtaken TV, radio. Social media obviously is cheaper. So there's gonna be less billboards, less and less. That has been a shift since about 10 years already, but I would say that that decade will continue and continue. More brands will obviously spend more money towards YouTube. They will not spend it in ABS-CBN or if they will invest it in ABS-CBN, they'll do it in the digital front of ABS-CBN YouTube channel, which means that they're basically giving a cut to Google nonetheless. You've got influencers all online. I watch sila Ninong Rai. I watch all of these mga cooking TV shows, and you're watching this as well. Obviously, I don't make much on my advertising because I don't have millions of viewers. But if you're an influencer like tipong kumakantang sila Arthur Neri or sila Moira or sila Gigi sa Gigi Good Vibes, I think these are they basically reach their viewers online. So I am a big believer on that. So also, I am believing that travel ad spend, the reason why travel ad spend continues to grow in 2021 and 2022 and in 2023 is because everyone is really gonna be traveling. I do believe in that. So digital advertising worldwide. So iba-iba sila ng mga stats, no? Other people believe 500 billion, 400 billion, 300 billion. No matter what your belief is, no, I believe that this industry is a growing pie. So I believe in the investment in FB and Google to be secular. So I don't even care if you have high prices. Let's assume that you have Facebook at $300. Should I tell you to buy here at $160? And the answer is a definite yes. Because I don't see FB going $100 or going $125 or $100. I see it going $500 over time. And then I also see that your Google is gonna stay high. So almost two-thirds of ad spending today is digital. This should be a very, very strong reason for those who like small caps to buy the trade desk. So the trade desk, it fell to $40. It's now $60, up 50% for the last 2 months because it really showed the secular trend for digital advertising is strong, no? So in case you're wondering, this is also something to consider. Even if I didn't discuss this, kasi mas in love ako sa Google and sa Facebook, I do think that any dips of the trade desk at 60, ito yon 40 to 60, binili yan, and hindi mo na mabibili yan lower eh. So I think that it just will consolidate and it's gonna go maybe 80, 90 here, tapos 120, maybe about 3-5 years, no? So nandyan din. But it's not cheap kasi, that's why hindi ko siya masyado pinopromote. Let's talk about so again, another reason why I like buying them is the attention economy. I believe in the secular trend, guys. The attention economy means that people pay just by giving you their attention, like you. They pay. I mean, obviously, they have a reason to be watched, no? Funny siya or maganda siya or may sense siyang kausap. So hopefully, hindi ako funny eh. Di rin ako pasado sa Miss Universe. So, you're watching me because my sense yung sinasabi ko or you'll make money from what I'm saying, right? So, there. False humility. Either way. Sige na nga. Attention economy. Thank you for giving me my attention. Please like and subscribe. Kung talagang you're attentioning or you're paying attention, please like and subscribe naman so that more and more people can watch. Pay attention. So, I do believe that attention is the new currency. Obviously, social media believes that if you have 500,000 views, I pay you advertising dollars for that. So, yun. Content marketing really works. I view that correctly. So ngayon, si YouTube, they're also exploring with Shopify. Although hindi natin masyado din-discuss today kung Shopify is a buy, Shopify, in my view, actually also bottomed out at $30, which is equivalent to 300 USD. Marami talaga, guys, sobrang gandang opportunities to buy. You can ask me individual companies if you wish. Obviously, this is just 1 hour talk. I can't talk about the entire universe, about the entire NASDAQ, about all the world's secular trends. If you really want to make me talk about secular trends nonstop, go to awesome10x.com. www.awesome10x.com. Learn from me. I have monthly, I have yearly. I will give you day by day, blow by blow, Viber nonstop. I mean, you can also ask me personally. So I'll help you build your portfolio. So I personally am really, so the reason why content marketing works, obviously you build trust, relationship with humans, and then they will need you with the product and they come back. So in my view, so yun, either yung kahit na yung affiliate na lang, o please use my eToro code, my IDKR code, and my Webull codes if you haven't opened an account, obviously. So kahit yun lang, that's a good enough thank you na rin, di ba? So, the attention economy, yan. So, sa attention economy, marami yan. I don't believe too much in Snapchat. I use a lot of Twitter, but Twitter does not know how to monetize that attention. Ang malakas talaga mag-use ng attention is Google and si Facebook. Facebook, IG, yan magaling. Si Pinterest, they're still struggling. Parang isang tao per user nila, they only make about $1. Unlike si Facebook na tipong $7, $8 na kaya pa mag $10 charge. So 10x higher si Facebook. And yet, from a pricing perspective, magkano lang si Facebook ngayon? 10 times multiple. Kaya again, Facebook is a buy. So attention economics is an approach to management of information, treating human attention as a scarce commodity. Your time is valuable, so yes, thank you for watching this. Attention is a resource. A person has only so much of it. So the reason why I discuss about attention economy, take note in 2021, no, saan ba nilagay ng tao yung attention span nila? Facebook, 1.4 million. Noong 2020, 1.3 million logging in. 1.4 million ngayon nagsuscroll. Sa YouTube, 4.7 million videos viewed. Ngayon, 500 hours of content uploaded every single day. I would argue, hindi pa nga yan. Baka every second yan, 500 hours every second. So si WhatsApp, 21 million texts sent. Ito, 19 million. So you can see growth talaga, family of apps. So lumiit talaga si Netflix, Netflix 764,000 hours watched. Ito 28,000 subscribers watching. So lumiit si Netflix kaya hindi ko pa pinapabay sa inyo si Netflix. I believe that Netflix, however, is a buy at 165, 170, pero hindi siya magbe-break above 250 until makrack the code ni Netflix yung free ad tier service that they're trying to explore today. Nag-experiment version ngayon si Netflix, obviously with a lot of competition. You'll notice na there are a lot of time spent in some companies na hindi mo rin naman nakikita na nagiging monetizable. For people who are saying na, TikTok, ang lakas ng growth, no? 145K. Pero walang profitability si TikTok eh. That's why I am hard-pressed to say na if ByteDance were even listed, which it isn't yet, no, I wouldn't even buy ByteDance kasi hindi siya profitable. I don't like to buy a company that's not profitable unless super high growth and I can see a path to profitability and super cheap mo. Pero hindi naman siya cheap eh. So even in mga private equity valuation, they're saying that TikTok will be $100 billion. Hindi ko sasabihin na it's a buy if it gets listed like that. You have tremendous value talaga with FB. And you'll notice, no, FB, it keeps on growing. Ito, 1 million logins, 1 million logins, it continues to grow and it continues to earn money. That's the important part, no? Tingnan mo, 2016, ilan na to? 700, 900, in 5 years, 2021, 1.4 million. Ibig sabihin, by 2026, sobrang dami, nagdo-double yan. Not just because of, not just because loyal ka pa rin eh, di ba? Obviously. So yun, loyal or captive. Dalawa lang naman yun eh. Either you like it or you need it. And I'd say social media is a necessity. It's a consumer staple. It's not a consumer discretionary good. Every company, no matter if they say, toxic dyan, namamatay mga teenagers dyan dahil they go suicidal because the false beauty about the aspect of mga how women should be perceived at, blah, blah, blah. All that talk, I think, the bearish case falls moot when you talk about the revenue numbers and the earnings that Facebook generates. So ako, pera lang. FB is a buy. Now, let's talk about the CCJ. You cannot understand uranium without understanding the big policies of the world. So in 2021, actually since 2020, a lot, actually since 2011, for the last 10 years, China has done nothing but keep energy security first. So, and also they have been the largest investors of renewables, making China the 90% market share when it comes to solar panels. So China has already put energy security first. They even double, triple down on renewables. So I believe in renewable energy. China's Xi Jinping said that we need to have carbon dioxide emission peak before 2030. In fact, the biggest believer of Tesla has been China, not even US. Well, Obama believed in them, but Obama just gave a loan. Kaya tanga-tanga din si Obama. Kasi if he just simply invested in Tesla, America would have gained more on the 100x move of Tesla, which happened from 2011 listing ni Tesla to 2022. See, China, they have 5% stake in Tesla through Tencent. Tencent is a state-owned enterprise. 5% stake on a 1 trillion company is a what? $50 billion. So, kumbaga, China is smarter because they gave Tesla the ability to open Tesla Shanghai, the Shanghai Gigafactory, giving jobs for Chinese. And then, of course, the electric vehicle revolution is something that the world believes in. So China is a market, but also a manufacturing giant. In fact, the largest battery maker is CATL, which is listed in Shanghai. Hindi mo siya mabibili kasi you're not a mainland Chinese. Pero CATL has been obviously a 10x money maker for Chinese people there. Kasi all the electric vehicles like BYD 1211 is something that we can invest upon. I'm also a believer in that. I've invested that in $40, $50. Ngayon, medyo mataas na yung 1211. Di mo mabibiling EV na yon. It's now about 250. Pero sabihin na natin, mabili mo ng below 200. I think that there are tremendously good opportunities. So, am I a believer on natural gas, coal, oil, non-fossil fuels? The answer is yes. I do believe that itong energy consumption drive is a 10-year play, 10 to 30 years play. So guys, we're talking about a mega trend here. Kung nakalimutan nyo mag-invest ng Apple noong 2007, 2001. So, I'll give you a real story. My grandfather, no, not my grandfathers. My lolo didn't invest kasi in the stock market. But this is a true story. Storytelling time tayo. $7,000 was purchased by a grandfather in year 2003, 2001, 2002, 2003. What happened in 2001 to 2003? Steve Jobs came back to Apple. So he was a big believer of Steve Jobs. So he bought 2001 to 2003. $7,000 was worth, I think, $1 Apple. Right now, Apple is about $100. $150. So literally 150x. Now, this isn't about Steve Jobs. It's because, well, partly Steve Jobs, but also the smartphone revolution. In the last 22 years, diba, Apple has gone from a $10 billion company to $2 trillion company. So his money definitely went 150x. He was investing ganun ka baba pa. Obviously, during that time, wala pa naman computers lahat ng tao. Macs were just infancy. So either magaling si grandpa or kasi obviously nag-invest siya, nag-trust siya kay Steve Jobs. And yun, I do believe in that. Criteria natin sa 10x yan. We invest in winners. We invest in secular winners. But you have to know the trend. The big trends na nanalo si Apple over and over for the last 2 decades was smartphone revolution, obviously the PC revolution, and all the semiconductors, and ngayon, the software revolution, which is lahat ng subscription. That's the reason why 100x moves si Tesla. When people say Tesla can go another $1 to $2 trillion more or $5 trillion more, I'm not gonna say no kasi I do believe in the full self-driving taxi, but I will not pay $700 billion for a Tesla. Ngayon kasi Tesla is trading at about 700 billion. So I can buy many other companies that will make money in that EV revolution without having to pay a steep price. So don't get me wrong. I'm not saying na hindi ako believer sa Tesla. I believe in it. I believe in the secular trend. And I am a big believer of investing in mega trends. First and foremost, it's not important what quarters reports are. What's important is, can you see the business growing? And obviously, lahat ng picks ko na yan, Airbnb, Disney, si Google, Facebook, and si si CCJ, which is our uranium play talaga. It's a play on nuclear. Real siya. Um, so anyway, yun, yung story na yun, yung $7,000, 7,000 shares, naging 100x, naging 7, sorry, hindi nga 100x, 150x siya nun eh. So, i-times mo na lang yung $7,000 mo sa $150, times 150. Apparently, actually, hindi nag-150 eh, kasi ang daming stock split ni Apple. So, this grandfather, namatay na siya, tapos yung grandson niya, hindi alam na yung grandfather, instead of giving him a tuition fee fund, sabi ng grandfather, sorry, wala akong pera pang tuition na $7,000 lang ako. Pero hopefully, pag yung anak mo naging 20 years old, bigay mo na lang yung retirement fund ko. Yung grandfather na yun, yung retirement fund niya, alam mo, after 20 years, obviously, Apple lang yung hawak niya, in Apple ni grandpa, no? $3 million yung amount na yun. Namimigay din ng Apple cash dividends kasi yan, mga $1. Anyway, long story short, kaya yung mga story na yan, yung mga tao is, what's the next Apple? What's the next Amazon? What's the next Tesla? Well, the answer is, the next Tesla is still Tesla. The next Google is still Google. The next Facebook is still Facebook. I don't think that TikTok is gonna unseat Facebook, by the way. That's why, if you can buy right now Facebook at 50% discount, I think that you should take advantage. Lalo na people all over the world are talking about recession. But recession isn't really deteriorating the real numbers of these companies that we're talking about. Si CCJ, for those who don't know what Kamiko J does, let's talk about some ideas for you. Why am I interested with the uranium play? So let's take a look at the second quarter results. Cameco is the second largest uranium producer in the world, and you need uranium for nuclear. Lahat ng nuclear plants na mag-open, they need the commodity. So our results reflect very deliberate execution of the full cycle value capture, no? In the drive for a clean energy profile, carbon zero, 24/7 renewable energy, struggling with power shortages. Obviously, si California, puro power shortage dyan. Spiking energy prices, dependence on Russian energy supplies. The good news for us, many are now turning to nuclear, providing safe, reliable, affordable, carbon-free baseload electricity, also offering energy security and independence. It is still very early days. We're seeing some utilities beginning to pivot towards procurement strategies. In fact, we had contracted success, 45 million pounds added to our portfolio of long-term uranium contracts. Hindi pa nila mamamine yon, hindi pa nila nakukuha, meron na sila kagad long-term contract, and may significant pipeline of contract discussions, meaning mas maraming buyers kesa sa yung supply nila na kaya ibigay. So we are focused on efforts on capturing conversion business as conversion prices today are at record highs. So far, 100% year-on-year yung uranium, from about $13 to $20. Let me show to you this. Let me show to you the price chart of uranium. So inaral ko yan. So I have to just repeat the things that I like about the ESG boom. Here, this is relevant for you, for you who are newbies on uranium. So marami nang may alam ng uranium since 2010. Why do you think it dropped 2011? Because nagkaroon ng Fukushima plant bomb sa nuclear disaster in Japan. And because of that, nung nagkaroon ng bombing or ng disaster dun sa Fukushima nuclear problem, for the last 10 years, namatay yung entire uranium segment because obviously, sabi nila, wala na, hindi na mag-open ng nuclear plants. It's the only nuclear plants that remained operating for the last 10 years was China. Pakita natin yung chart ni China. This one. This is important. So in 2011, the nuclear energy, China, 1990 zero. Now, noong 2010, 2011, nagkaroon ng meltdown on the Fukushima Daiichi nuclear plant, halting uranium prices. Naging bear market because of that. Now, 2011 till 2020, which is the last 10 years, France already committed to cut their dependence on nung time ng 2015, nag-cut pa si France. So nagkaroon na naman ng more bear market reasons na, Europe doesn't want to invest in nuclear. Tapos the new US reactor spearheaded by Bill Gates. So for those who are watching Netflix, meron doon inside Bill's brain. You can see that Bill Gates is a big proponent of nuclear kasi all their studies confirm that the way to solve our energy crisis is to have a nuclear reactor and just better ways, no? So I've done also a lot of awesome 10x studies explaining why nuclear energy is really a solution. So But that's another effort na hindi na kaya natin in this section to discuss it eh. Pero yun, so since then, no, China's production since 2010 to 2020 has been going up 400% since 2011, and they want to ramp that up until 2035. So for instance, Beijing said, articulated their long-term goal, 200 gigawatts, enough to power more than a dozen cities the size of Beijing. China's nuclear ambition is so appetizing to uranium investors because it can actually achieve them. Because China, when they said about solar, sigurado eh, dahil nga kay China, the solar panels went down 10x in price. So kung dati, it used to be that you need about 5 million pesos to install, ngayon, as little as 500,000. So because of the abundance of scale, the Moore's law, so nagawa yun ng solar, nagawa na ni China yun sa solar. That's why solar now is the cheapest form of energy. And ginagawa din ni China yan for nuclear. China right now, 46 reactors planned or under construction compared to just 2 in the USA. So the big bull case talaga is China, US, Germany, Japan. They're all building all these nuclear plants. There's so much more to discover in the bull market for uranium. Pero eto, sige, quick snapshots na lang, no. US Department Loan Program Office in 2021, si G. Garcia, sabi niya they're giving $45 billion in clean energy funds. Not just that, just recently, this 2022, there's a unprecedented $379 billion all in si Biden for mga clean energy support. So through subsidies, through giving them loans, through giving them tax breaks. So all of that is helpful. And you can see Google also is doing that. Google's biggest moonshot is its search for a carbon-free future. I told you about Google kanina. I didn't even tell you how Google's moonshot, yung mga ventures nila, is not imputed in the current price. Yung Google Healthcare, ang laki nun. Hindi pa natin pinag-uusapan yung mga yon. Pinag-uusapan lang natin, yung pagbayad mo sa Google YouTube, tsaka yung pagbayad mo sa mga search ads, tsaka sa cloud infrastructure. Maraming hidden minis, parang hidden Mickey minis yung Google. Ang dami kong gusto sa Google eh, yung healthcare play ni Google. Kaya may stake si Google sa mga Amwell. May stake si Google also in Airbnb kasi they help in advertising, obviously. So Google's biggest moonshots are actually to make a lot of green tech then. So Google's data centers today, powering billions of web searches, emails, have said that they will meet their data center electricity with renewable resources. This is also true for Apple, for lahat sila. So they've already said na they're gonna achieve carbon neutrality. One of the reasons why I'm also bullish in SunPower, kasi ang partner ni Apple for solar is SunPower, which is also an awesome 10x top pick natin yon. Amazon already pledged 2040. Google wants it very much soon, kaya okay talaga si Google. Wait, do I have time, guys? Oh no, it's 6 p.m. I have to leave, sorry, pero hope that you can continue watching Awesome 10X. Fast break tayo. Bill Gates says climate tech is gonna produce 8 to 10 Teslas. What he's saying is that investing in clean energy is where the next $10 trillion is coming from. So to give you an idea, yes, I believe uranium is a pick there. For a company pick, that is Cameco J. Now for solars, I'll be very fast in telling you, it's Sunrun and Enphase in my view. But of course, you can also invest in SunPower. Sunrun, SunPower, lahat panalo yan. For me, you will not get shaken out if you are of the view na we are gonna go carbon zero. So, lahat ng evidence nandyan, all the world, in a nuclear investment ahead of the COP26. That's like the biggest parang Paris climate change. Okay, I need to leave, guys. Sorry. But I hope that you learned something in today's lesson. And let's see you again next week, guys, for another edition of No-Brainer Stock Picks for free in Awesome 10X. See you again and end broadcast. Bye-bye.